Hello everyone, welcome to the daily market updates video where I share the market action, my learnings and my insights and my view going forward. So today was a typical FOMC day. For all of you who are having the first time experience of this FOMC, basically FOMC means Federal Open Market Committee, and today was a Fed press conference. And today, the Federal Reserve decided to not raise the rates and keep the rates same. So more on that on the macroeconomic section later, but let's jump right into the analysis and see where the markets are and what we can deduce from it. So starting with the analysis, normally I structure my videos in these sections. So I do a weekly analysis, then I do daily analysis, and then I do intraday analysis. So I also discuss the fundamentals and macroeconomy as well to understand the underlying dynamics of market. So without further ado, let's jump into the analysis and starting from the weekly time frame. So talking about the weekly time frame, I wanted to discuss two important things. First, and the major development is, this is the first closing on the daily basis near the all-time highs and actually exceeding the all-time highs if you count on closing basis. So let me show you what I mean over here in the charts. So this is the weekly chart. And as you can see over here, we made the all-time high on November 22nd, 2021. And right now we exactly are, sitting at the all-time highs, and that too on closing basis. So over here, you can see there was a wick formed, and over here, it seems that we will close this week at the all-time high. So that is the first, observation over here. The second observation is we are overstretched on the upside. So what do I mean over here? The Bollinger Band is sitting at 16,550 and the price right now is sitting at 16,770. So it is a very bullish market action. The stock market is the resiliency of the stock market is very, very nice. Any news, any fundamental tectonic shifts is being perceived as positive, and we are right now sitting at all-time highs. The initial level of support still remains the same. That is the 5-day moving average, which is sitting at 16,200. So the Christmas rally is still intact. And now, since we have all the news baked in, now all the major data releases are out, there is a very low chance that we will see a meaningful pullback. Meaningful as in 5 to 10% correction or a 5 to 10% pullback is very unlikely until the January data comes out. So please keep this in mind. And on the weekly basis, my support levels are still the same. It is the 5-day EMA and the Z-Lima that you see over here, that is 15,800. But it is very highly unlikely that we will see these levels until and unless some fundamental news comes out which spooks the market. So until then, we are nicely positioned to at least consolidate for a few weeks until January, and then depending upon the upcoming data, we will see where the market goes. But as far as price action and technicals are concerned, right now we are ultra bullish. So that's my take on the weekly time frame. And now let's go to the daily time frame. On the daily charts, I wanted to discuss two important things. The first thing that happened today is we breached the R1 resistance level from the pivot point, and that too with very high volume. So let me show you what do I mean over here in the charts. So as you can see over here, this is the daily chart, and you can see the monstrous run since the October 26 lows. So this was the consolidation, and you can see this gap up was because of the contract switching. But the most important thing that I wanted to highlight is we started the day at the top of the Bollinger Band, and we actually closed the day breaching the R1 resistance level, and that too with very high volume. So as you can see over here, the volume was 665K. So when you have 600 plus thousand contracts trading in a single day, and when you have such high bullish action, then there is a lot of reason to believe that this rally has legs. So right now, when we eliminate important levels with high volumes, it is very hard to be bearish. So again, we can see, a test of the Bollinger Band, that is the top of the Bollinger Band. We can normalize and the price can consolidate in this zone for, next week or so. But do expect a lot of consolidation over here, since we are actually, if you can see over here, we are sitting near the all-time highs. So there is a very high chance that we will consolidate or maybe take the support at the 5-day EMA, that is over here, and then after taking the support at 5-day EMA, we bounce back again. But on the monthly basis, you can see over here right now we are hovering around an important resistance level. So that is a big thing to note. Again, if let's say if the markets pull back, then my support level is going to be, the bigger support level is going to be the anchored VWAP, that is the white line that you see over here, and my initial immediate support is going to be this 5-day EMA, just in case if the markets pull back. So that's my take on the daily time frame. Two important key takeaway is we broke the R1 level with huge amounts of volume. Now that may be because of this FOMC day to day, but nevertheless, the price is the price and the data is data. So we have to keep an unbiased mind by, when we are taking the inference. So this is the inference. I know a lot of you are waiting for a meaningful pullback and a lot of you are skeptical about the markets, but until and unless, the indicators or the charts tells us or gives us a bearish signal, we cannot be bearish. So let this, Christmas rally do its job, let the markets go up. Then we will see if there is a tectonic shift in the, incoming data, and if in case we are going to correct, then how much we are going to correct. So right now the market actions and the technicals both are bullish. We might see a lot of consolidation in this zone. So let me show you what do I mean over here. So over here in this range, we can see a lot of consolidation because this range corresponds to the all-time high zone. So we might consolidate and go sideways for a few days and then go up. So that's my take on the daily time frame. So the analysis today on the intraday is very, very specific. And let me show you what do I mean. So yesterday I told that, it's an FOMC day, Fed conference is going to happen and Fed Chair Powell is going to speak, and therefore the intraday volatility will be exponential. So I normally advise people that on the days like these, do not trade on the intraday. So let me show you why I say this. So when I go to the intraday charts, that is over here, the 5-minute chart, so you can see how volatile it is. So we started the day today over here, right? We just had a one confirmation, that is R1. So as you can see, this R1 pivot level was respected very nicely. The price got rejected in the early part of a session, that is the first 10 minutes. And then we tried to test again, but it still got rejected. And then you can see over here at 11 o'clock, the Fed interest rate decision came in, and look at how volatile it was. So it gave a 77.5 points candle in one 5-minute candle. So it's like huge moves, in the intraday. So this is exactly why I tell people, like, do not take any positions, going into the Fed interest rate decisions or FOMC meeting. So today there was very little, risk reward ratio for us to trade on intraday basis, specifically because we don't know what the market's reaction is going to be on the fundamental, events like these. So normally I refrain from trading, on the days like these, or even if you want to trade, just trade before these kind of news event releases. So this was the only one conclusion that I had in the intraday. We perfectly got rejected at the start of the session near the R1. Apart from that, we got a bearish crossover after 8:15 Pacific time, that is over here. This was a very nice bearish crossover, and we also had a really nice 44-point downside. So if at all you can't control the urge to let's say day trade on the FOMC days like these, then I would advise to trade only before the FOMC announcement. So this was the take on the intraday basis, and you can see after the Fed Chair Powell started speaking, that is after 11:30, the market still went up. So after he finished his speech around 12, then the market cooled off and again it had a rally. So these are very, very huge volatile days, if you ask me. So my first recommendation is to not trade on these days on intraday basis. So that's my take and analysis on the intraday time frame. So now let's go to the macroeconomic section and see what we have. So yesterday I told that the next leg of the markets is going to be very, very dependable on the remarks that the Fed chairman gives in his press conference. So today was a typical press conference. He used a lot of diplomatic words, like he is still relying on the incoming data, he is still welcoming the downward slope of the inflation, and he is going to collectively take the decisions based on the other voting members as well. So it was quite a dovish speech wherein he is keeping the rate hikes on the table if the incoming data doesn't support. He is acknowledging that the economy is slowing, and he's welcoming that. He also talked about the labor market that is also softening a little bit. The wage growth is softening a little bit. So he acknowledged a lot of fundamental things. So now going forward, the market is going to digest his remarks. So regarding that, this is my take on the macro economy. And since we are going into a very slow holiday season, I don't think there will be a huge volatility in the markets. Tomorrow there is an important data release in the economic calendar. It's jobless claims that is going to be released. The retail sales are also going to be released. So my game plan going into tomorrow is I will not trade until 7 o'clock. Let all the news until 7 o'clock gets out, and then take the trades afterwards. So let's see if we can grab some really nice shorts tomorrow. So that's my take on the macroeconomy, and that's my game plan for going into tomorrow. And lastly, I wanted to thank you, all of you all, to watching this video and to making this special. Please feel free to like, share, and subscribe, because this gives us motivation, and also the YouTube algorithm will forward this content if you find value in this content.